If you look at Asia, most of those markets are trading higher as well.
Yes, Samina Hamid has resigned from the position of executive vice chairman of the company.
Support comes in at the recent low, which is 44,429.
When you've had the FIs being net short, it's not been such a bad thing. So the bulls will say, yes, the FIs are net short. That sometimes provides some kind of a cushion. So let's see how this goes.
Q&Q as well, margins were 10.8 versus 3.2%. So it's a multi-quarter high when it came to margins.
So LIC can now increase their stake to about 9.99%.
For now, here's the first opening tick on the index, up about 85 odd points.
Not surprised that you're seeing a degree of earnings slowdown.
Our coking coal cost, we had indicated, would go up by $20 to $25. It went up by close to $21 in the last quarter.
The note in its very beginning says that Adani Enterprises is the core of everything that India wants to accomplish going forward.
A good start, and it's gotten even better at 11 a.m.
CLSA ends by saying they may also offer income support to women, like some states actually do.
Looking really good in the new series for the markets.
It's a massive, massive bounce on our screens, and I don't think we can call this a bounce anymore because this is turning out to be really something else. That was a day so far, and it's been an up and up kind of a session. We're coming to you live from the CNBC-TV18 Motira Oswal studios. This is Closing Bell. I'm Prashant. With me, my colleagues Rima and Surabhi here in the studios, and Nigel, of course, is joining us from the newsroom floor. Guys, hi. Good afternoon.
What an afternoon it's turning out to be, boys and girl. It's absolutely phenomenal, right, Prashant? Because it's got so many legs to it. I mean, we're talking the huge move on Reliance, but we're seeing banks perform and, some of the other large cap names like L&T as well today.
And it's a big week, right? You've got the budget, the FOMC, big earnings. So in that context, it's a fabulous start to the week.
Well, and as we said at the start of the series, that was earlier today, when the FIs are net short, normally, in fact, it's not such a bad thing. And it's proved yet again, at least for now, the FIs net short positions at 1 lakh contracts on the short side. And for the time being, it appears some of those shorts are getting squeezed out. We'll know by the end of today.
Absolutely. Frankly, I thought we'd get a bounce till about the 20-day moving average. But this is something else. I mean, that level was only 2640 roughly. That got done early in the session, in the first couple of hours of trade. And then the market has added on another 100 points on top of that. And that's the reason why I'm saying that we'll need to see whether this lasts or we kind of keep going. So as I said, it's a big bounce. The Nifty has jumped past, by the way, with this 300-point move, has jumped past multiple resistances. The 20 days, the first one we saw coming. But that, of course, has been left behind. And then it's interesting, the day's high today is exactly the 61.8% retracement of the recent fall that we had from the 16th of January to the low of 24th of January. So basically from a high of 22,124 to the low of 21,137, which is the low 2 days back, last Wednesday. The 61.8 is 21,747. The day's high today is 21,745. Just 2 points short of that number. And then the market's kind of, I don't know if, that is a level with the market will respect. Frankly, as I said, I was looking at just a retracement to the 20-day moving average. Reliance has contributed. Reliance is going and going. Obviously, there is some serious fund buying, etc., which is coming because, that one does not move 7% on the back of just pure short covering. That's a very large move that we have. 100 plus index points coming in from there. So that's essentially leading to the oil and gas index being the biggest gainer, the energy basket being the biggest gainer, the CPSE index being the biggest gainer, because, Reliance is a part of all those indices. But even out of the, if you even keep Reliance out, the PSU stocks continue to rally on. The triggers are well known. There is the FOMC on Wednesday and the budget on Thursday. So we'll see how that goes. But for now, there's no taking away from this big move that we have on our hands. Rima.
Well, it's FOMC budget and it's a big week of earnings. Even globally, 20% of the S&P 500 companies will be reporting their results this week. Big tech companies, so whether it's Microsoft, Alphabet, Meta, Amazon, Apple, all report numbers this week. And back home, we're watching numbers from ITC. And ITC, by the way, has moved to the day's low in anticipation of its numbers. Mangalam was indicating it's expected to be a mixed, softish quarter. But ITC, there you have it. It's down over 1%. But other than that, through the course of this week, you've got SBI, Tata Motors, Maruti, NTPC, Dabur, all reporting numbers. So it's a big, big week that we're watching. But today, it's single-handedly Reliance. If you pull up the contribution plate, you will see Reliance Industries is contributing about 150 points plus to the Nifty gain today, 140 right now, out of the Nifty up move of about 350 points. But Surbhi, we've had 2 back-to-back weeks of losses. Markets have been nursing some losses, particularly the banks. So it's a pretty good comeback on an important week.
It is. And I think that there's, everybody will be happy with the comeback, but just the ferocity of it, the extent of it, the size of it, I think that is what's made people a bit surprised today. But I think a good time to then bring in the experts and get the conversation going on what you should be doing. Play this bounce, short this bounce. What's the call going forward? We have Rahul Mohinder joining in for some thoughts and ideas. Rahul, good afternoon. Great to have you on the show as always. So, tell us what's the approach that you have, considering that some of the key levels like the 20 DMA, etc., and even the previous consolidation zone of 21,500, the Nifty is firmly above that now.
Good afternoon. I think I kind of resonate with what Prashant said, that there are 2 or 3 points which come in together at this level. As he was pointing out, we got a 61.8% retracement, and in layman terms, that's an important Fibonacci level of resistance. In fact, just to draw your attention back to, probably a few days ago, 23rd, when we had that little bounce back, in the middle of January, around the 23rd, is where we paused exactly at 21,750. Now, I would say that this itself becomes an important point. So today's high is again rotating around that point. So let's not try and take a new position if one is not already into it, but watch this level of 21,750 a little more cautiously, because I think the index, as you were correctly saying, it's largely Reliance contributing. I mean, I can look at some clear index weights which look nice and negative, for that matter, in Infosys and ITC. So there's quite a delicate balance. You've got to be stock specific. I don't think this is a market I would just jump in and buy the index at the current value.
Okay, let's get to the big stock then, and that's Reliance Industries. It's a record high for the stock today. It's lifted the Nifty by 140 points. Sudarshan joins in for more details. Sudarshan.
That's correct. So Reliance Industries today has seen a sharp surge and is currently adding more than 100 points to Nifty. And talking specifically about the stock, it's at a record high, and market cap has crossed more than rupees 19.50 lakh crore. In just today's session, it has added market cap of more than rupees 1 lakh crore. Now, talking about the news that might be one of the reasons for stock to move higher, over the weekend, there was a report from Bloomberg which suggested that Disney India's valuation in latest stocks have seen a sharp fall. In the latest stocks, the valuation of Disney's India business is seen somewhere around rupees 37,000 crore against previous valuation of rupees 83,000 crore. Remember, sources had earlier indicated that Reliance Industries has been in talks to acquire Disney's India business. Talking about the brokerages which have the coverage on Reliance Industries, 80% of them have a buy call, and their target price indicates an uptick of up to 10% even from current levels. Amongst all the brokerages, Nomura has the highest target price of rupees 3165, followed by Jefferies having a target of rupees 3140, JP Morgan has a target of rupees 3100, and CLS's target on Reliance is rupees 3060 per share.
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's come across to Deepan Mehta. Deepan, what do you make of the move? Massive move is what we're seeing. And I was looking at the shareholding. There are 2 large funds that have stake out there. One is LIC that has around 6% stake in the company, 6.3% approximately. And SBI Mutual Fund has another 2% in the company. And they are the 2 large holders, in Reliance Industries. So what's your view at these prices on Reliance Industries? And how would you play it? Would you look at Jio Financial as another way of playing it?
Yeah, Nigel, good afternoon, and thank you for having me on your show. No, I think that the move certainly has surprised me, especially 6% on a large cap stock like Reliance without any specific news flow does raise eyebrows. But as I heard, it could be definitely some FII buying which has taken place, especially India-specific index-based buying. which may have led to the stock price going up. But hearing that the biggest share of the LIC, I think maybe you could look at LIC as a stock. And although that's done very well in the last 2-3 months or so, with the way the stock market has moved up, I'm sure the enterprise value for LIC also would have moved up significantly, and the discount may only have increased. And I think last few months and quarters, whatever we have seen in LIC, the overall growth rates also in terms of new premium income and other parameters also look quite interesting. And PSUs are also the flavor of the season. So from that point of view, I think LIC looks a very interesting stock from an investor's perspective. But coming specifically to Reliance, I think shareholders can continue to remain invested in Reliance, but I wouldn't go for a fresh investment in Reliance unless don't I have a clarity on how the value unlocking process is going to take place.
By the way, Deepan, hi, good afternoon. Around the budget, any thoughts? Budgets generally are not great. I mean, if you're trading, right, the day or the day after, it tends to be a little volatile and mostly down rather than up, at least that day. Last budget, if you remember, of course, I think it was on the day of the budget, we got that news on Adani. There was that second report which came through, if you remember. So it was all, there was a fair bit of price action on that count, and then there was the budget as well. Any thoughts? The very near term.
Yeah, good afternoon, Prashant. See, I think this budget will be a non-event, and there could be a lot of announcements, but I don't think it'll make much of a difference to corporate earnings or the stock market per se. In any case, it's an interim budget, and one cannot expect anything path-breaking over here. But what more can you expect from the finance minister? I think what we wanted was low taxes, stability in the tax regime, both of which have been the hallmarks of the last 5 years and before as well. And all the assumptions and the estimates taken in the budget figures are realistic, and therefore whatever numbers we are getting in terms of spending or revenue, they seem to be beyond the budget or better than what was expected. So as such, I think nothing really to expect from the budget per se. And I would say that RBI policy or FOMC meeting, these kind of events have a more effect on the stock prices than the budget per se.
Okay. Deepan, do hold on. BPCL reported their numbers and the stock has surged close to about 4%. Sonal joins in with the details. Sonal, prima facie, the numbers looked a little lower than consensus.
But it has been a refining beat if you look at the internals, and the numbers are not as bad as HPCL. So maybe the street is taking some positive cues from that. Just let me take you through the numbers first up. Revenues have come in at 1.15 lakh crore rupees. The EBITDA is lower on a sequential basis, but that was expected, and it is also lower than what the street was working with by around 600 crore rupees. Margins have come in at 5.4% versus an estimate of 6.5%. Net profit has come in at 3,397 crore rupees, which compares with a poll of 3,677 crore rupees. So around a 300 crore rupee miss there as well. But as I said, it is not as bad after the performance that we saw with HPCL. And if we look at the internals as well, the calculated GRMs have come in at $13.3 per barrel, which compares with a poll of $11.7 per barrel. So that is on the higher side. The refining throughput is higher at 9.86 million metric tons. Their marketing sales are higher at 12.92 million metric per ton. So the internals are looking better versus the reported numbers, and that's why the stock is higher. ICICI Securities has put out their first cut, where they say the blended retail margin for petrol and diesel was a profit of 2.8 rupees per litre in Q3. The marketing margins, however, have declined on a quarter-on-quarter basis, so that miss has come in on the marketing side for the company in the reported figures. Now, let's do a peer comparison, because now all the three oil marketing companies have reported numbers. So HPCL is at the lowest, with GRMs of around $8.5 per barrel, IOC at $13.5 per barrel, and we have BPCL at $13.3 per barrel. So it's definitely BPCL and IOCL which have done well in a weak refining scenario. Just talking about HPCL as well, because brokerages have written about it today. Jeffrey says they are maintaining underperform here because of unfavorable risk reward. They have an underperform call on the stock. Motilal Oswal, however, has upgraded the stock. They say miss on EBITDA due to lower than expected marketing margins, and marketing continues to be the issue for all the oil marketing companies. Nomura says that rising refining spreads means room for price cuts has fallen sharply. So now in the election year, all eyes will be on fuel pricing going ahead. But that's the report card for all the three oil marketing companies in Q3.
Interesting. Thank you very much for that. Deepan, you want to weigh in on oil marketing companies and how they stacked up?
So I think if you're a bull on PSU stocks, then oil marketing is in fact the last kind of stock space which has not moved up. Of course, they've gone up, but not as much. And clearly, there's scope for re-rating of the price to earnings multiple over there. All of the oil marketing companies are expanding their capacities, especially HPCL more significantly. But BPCL has the advantage of higher marketing sales, and those margins should also improve. Dividend yields are good. These are, end of the day, cash generating assets. And most importantly, I think if oil prices remain subdued, then they will have the freedom to, kind of get the best out of their assets in terms of higher profit margins. So very positive on all of these three companies. And you could have a decent trading rally in all the three companies. But I think BPCL remains the favorite because of its exposure to marketing, more marketing sales. And there's, I think, where the opportunity lies.
Would you read anything into LIC's decision to increase their holding in HDFC Bank to 10%? The news which came over the weekend. So currently LIC has a little more than 5%. Do you think this is a routine approval that companies like LIC take to increase their stake? Or do you think you will take comfort from the fact that if HDFC Bank drops, there is always LIC to come out there and buy the share price, in a way providing a cushion on the way down? How would you read this news flow?
I think it's just a simple permission taken to increase holdings. HDFC Bank now has an even higher weightage. And from that point of view, LIC, which generally goes for large cap index stocks, may want to increase their holding. But it's going to be a gradual process. And the way LIC operates in the market is that, they're not typically the price makers, they're the price takers. So yes, you're right, on corrections, on major sell-off days, you could expect LIC to come in and buy as much as they can get of HDFC Bank, and that may provide some sort of a support. But just because LIC is permitted to double its holding or near about double its holding in HDFC Bank, that doesn't make it a good reason to buy into HDFC Bank. If you're buying into HDFC Bank, it's more because you believe in the India story, and such a large bank with presence across the board in the financial services space cannot perform badly if the economy is doing well.
Okay, that's some of the key frontline names that are in the thick of news today. I just want to point out a mid-cap trend as well. Apart from PSUs, road contractors are pretty excited. So if you look at a lot of the stocks, IRB, for instance, is up 17%. IRB, of course, the added thrust is that they've won some sort of a arbitration where they could be getting a huge amount of compensation, about 1,700 crores, if my memory serves me right. We'll have Vivek talk about this in just a bit in more detail. But it's not IRB. Look at NCC, look at a Dilip Buildcon, look at an Ashoka Buildcon. So in general, perhaps a little bit of pre-budget excitement, but in general, a lot of these road contracting companies are doing very well in trade today. Deepan, hi, good afternoon. Any thoughts? Do you like any of these stocks?
I think all of these stocks merit attention. And the common thread, of course, is great earnings visibility. And the third term, when that happens for the BJP government, will be all about infrastructure. I think that has been their winning ticket. So more investments in infrastructure means higher business for these companies. Valuation-wise, they are quite reasonable. And all of these companies which you named, they have been focusing a lot on improving the quality of the balance sheet. Some of the mistakes made in the last decade about infrastructure construction and such infrastructure developers, those seem to have been kind of, put on the back. And they are focusing more on collections, focusing more on execution. And also the government on its part has been ensuring that there are hardly any delays once a large project has been awarded. So yes, I think they could turn out to be outperformers as they have been, and they still have some more steam left in them. And you could see a decent trading rally. By the way, I think the entire capital goods will be the sector which will provide the maximum alpha in terms of earnings for the December quarter and the March quarter, I think.
All right, Deepan, we'll take a quick commercial break here. We'll come back with more on markets. Pashupati Advani will also be with us. He's founder of Global Foray. So he joins in on the other side. Stay tuned.
Welcome back. Let's focus on Adani Enterprises. The stock is up nearly 5% after Cantor Fitzgerald initiates coverage with an overweight rating on the stock. Hormuz joins in with the details on Adani Enterprises as an entity. Hormuz.
Pretty bullish commentary coming in from Cantor Fitzgerald on Adani Enterprises. But before we get to that, we'll tell you something more about Adani Enterprises as a whole. And it is the flagship company, as we know, of the Adani Group. And it was the first one from the group to be listed in 1994. And it is engaged in the mix of establishing and incubating businesses. And from then, once the businesses start to run, they demerge those businesses as separate entities. Now, since its own listing in 1994, Adani Enterprises has incubated multiple businesses and has managed to list 6 of them independently, primarily being Adani Ports, Adani Power, Adani Energy Solutions, Adani Green, Adani Total Gas and Adani Wilmar. And in all of these companies, it holds close to from around 56% stake to around 88% stake, which is the highest in Adani Wilmar. And since then, the 6 independent entities that they have managed to list all the over the years. Now, Adani Enterprises itself has a market cap of around 3.5 lakh crore, but all the listed companies, barring Adani Wilmar, have a market cap in excess of 1 lakh crore rupees. Now, the 6 independent companies that they have managed to list now have a total combined market cap of over 10 lakh crore rupees. So this is excluding Adani Enterprises, of course. Not this is just the 6 companies that they have. Now, what has Cantor Fitzgerald said on Adani Enterprises? They have initiated coverage with an overweight rating and a price target of 4,368, which is a potential upside of 50% from Thursday's closing price. Now, what they are saying with regards to the business spin-off is the fact that the businesses that they have spun off has a combined market cap of $156 billion. And the ability to identify future trends will continue to ensure that Adani Enterprises acts as a differentiator in the coming decades as well. And that several businesses from the current portfolio can also be spun off going forward. Now, the potential business spin-offs that they are anticipating include the airports business, the data center JV that they have with EdgeConneX, and the energy ecosystems business, which also includes the solar, wind and the electrolyzers portfolio as well. Now, what they are valuing these businesses, they are valuing the airports business at around 1,620 rupees, the solar, wind and the electrolyzers business at over 1,500 rupees, and the data center business is what they are valuing at around 31 rupees a share. But it's a pretty bullish report on Adani Enterprises overall. Stock is up 6% and it is among the top gainers on the Nifty in today's session. Back to you.
Okay, all right, Hormuz, thank you very much for that interesting breakup there on the holdings across different Adani companies. By the way, I just want to mention, Deepan, of course, want your thoughts in on the Adani Group. And I just wanted to mention that all kinds of buzz doing the rounds. What I picked up from a couple of people was that perhaps the excitement around Reliance, ONGC, and even some of the Adani stocks could be that there's something big in the budget on the green side. Green hydrogen, green transition, if the government really makes that a big priority by offering tax stops. I mean, that's a lot of buzz on the street. But aside of that, I mean, your thoughts, Adani Group of companies, anything that would interest you right now?
No, I think all of them are just flying at this point of time, and one should wait for a correction before getting into any of these Adani stocks. But I think I'm most pleased with the fact that the numbers have come through gradually. And a lot of the controversies around the ownership pattern and corporate governance, those are gradually receding. And the group as such is getting higher and higher, I would say, coverage and support from the institutions, especially FIs, and that's always very positive. So as a shareholder of Adani, I think great to remain invested, but I'm not sure buying at these levels really is justified given the high valuations.
Okay, well, Deepan, stay with us. GAIL also has just reported numbers for the third quarter. Sonal is here with the very first cut. Sonal, over to you.
Well, it is a good set. It's a top-down beat, the big one on margin that we are seeing, and it is coming in at a time when we were expecting a sequential decline, but the company has gone ahead and reported a growth on a sequential basis. It is largely led by their biggest business, which is the marketing business. First, taking you through the numbers, the revenues at 34,237 crore rupees is in line with estimates. EBITDA has come in at 3,822 crore rupees, which is around 500 crore higher than the poll of 3,300. Margins were expected to come in at 9.5%. They have come in at 11%. And where has this beat come in from? Now, if we look at the segmental performance, marketing, where Kotak was estimating an EBIT of around 1,000 crore rupees, has reported an EBIT of 1,880 crore rupees. And this has come in at a time when we did see spot LNG at a higher price. Now, spot LNG prices have come off. So that is where the company has been able to make substantial profits because of container being sold at higher rates. We do have the transmission business where the EBIT has come in at 1,215 crore rupees versus a Kotak estimate of 1,400 crore rupees. Even the petchem business has done well. There was an expectation of a loss of 49 crore rupees, but the company has done a profit of 62 crore rupees. So petchem and marketing is where the company has done really well and has beaten estimates. Additionally, the company has also announced a dividend this time around. Usually the dividend yield on GAIL is around 5%. So there's an additional kicker which has come by for the investors, and that's why the stock is higher along with the other oil and gas stocks which are doing well, but a clear beat on GAIL today.
Okay, all right. Thanks a lot for that, Sonal. Well, IRB, that's the other stock that's surging today. Vivek joins us to tell us what's aiding the stock. Vivek.
Well, that's right. So a couple of pieces of news flow as far as IRB is concerned. Number one, like we highlighted earlier today, the company is the beneficiary. Now, this is the private InvIT of the company that's actually got an arbitration claim in their favor. So the arbitration award has been announced for Yedishi Aurangabad NH200 level BOT project. The project belongs to IRB Infrastructure Trust, that is the private InvIT. So, the arbitral tribunal has directed NHAI. IRB had filed a claim against NHAI. So what will, IRB InvIT get? IRB InvIT will receive compensation of close to 1,720 crore, including the interest payable as far as the date of award. Along with that, there is also going to be an extension of 689 days for the construction period. So quite positive as far as IRB InvIT is concerned. How does IRB benefit? IRB Infra will receive the proceeds of the time and cost overrun that they experienced and that they suffered as an EPC contractor. So positive news as far as IRB is concerned, 1,700 crore coming in. Now, along with that, today CLSA has written a note on IRB Infra. They're saying that infrastructure development stocks have significantly outperformed the indices over the last 3 years. They're saying that they believe that this could continue for one more year as traffic trends remain quite robust across most of the toll roads. They also believe opportunities may open up with the government's asset monetization plans that the government has come up for roads. They've gone ahead and raised the target price for IRB quite significantly to 63 rupees a share. They believe that now there will be more order wins, and they've started factoring in the EPS upgrades from there.
Got it. All right. Thanks a lot for that, Vivek. Deepan, you heard what Sonal had to say on GAIL as well as what Vivek had to say on IRB. Any view on both these two names?
See, IRB, I don't track very closely, so I don't want to comment. But yes, I think it's a big award which they have got, and certainly it's improved the sentiment in the stock. And valuation-wise, also, I sense it is quite attractive. Gas Authority, I think, great set of numbers, widely expected. And clearly, I think, the assets are now really playing out for Gas Authority, and they're getting full productive value of whatever they have put on the ground over there. Again, valuations here are pretty decent, good earnings yield as well. And as I said earlier in the show, that very positive on oil marketing companies. You could add even Gas Authority to that list, because now finally, I think we are seeing sustainable earnings growth from these companies, especially Gas Authority. And eventually, I think that should lead to higher PE multiple as well. So it's the best combination to get a good appreciation and a good stock.
All right, Deepan, thanks very much for that. Great speaking with you here, as always, on CNBC TV18. Thanks indeed. Well, the market, by the way, once again made a test of the, that level that we were talking about, which is 21,747. So the high, it went back to that level and then kind of has sold off a little bit more from that point on. But 300 points plus, so I don't think there's anything to complain. Pashupati Advani is with us, founder at Global Foray. Pashupati, good to have you with us here. Weigh in on, what could be, it's almost sort of impossible, but Reliance up 6-7%. What do you, it obviously got to be some serious fun buying, etc. But I don't know if you own it or what could be the triggers, big triggers. I think, are you allowed to unmute yourself, Pashupati?
Oh, sorry.
Yeah, can hear you.
Now can you hear me?
Yes, please.
Sorry. So Reliance has always positioned itself as a proxy for India Inc., since it's in so many businesses that touch consumers in India. And similarly, we are seeing Adani position itself for some of the other businesses that Reliance is not in. So I think both of these are a proxy. If somebody's coming from outside India, they're the places to look for investment, as well as the banking sector, which, as you mentioned earlier, you've got HDFC Bank, which has fallen off, but now will probably get some stability because LIC is allowed to buy some more. And, I think that those are the ones that foreigners are looking at to buy. Now, everyone sitting outside India feels that we want to get into India, but they don't know how to do it. So obviously the easy way is to get into large cap Indian stocks through funds, and that's what's happening. So we're having a little bit of a trickle that's coming in, despite the fact that the FI numbers are not looking positive generally. So, but who knows? I think, as I said, everyone outside India seems to be bullish on India. So we are enjoying it. They say.
Pashupati, how are you going to solve this HDFC puzzle? It fell close to about 14-15% over the last 2 weeks post its numbers. What from here on?
Well, as I said, it's very difficult. I've had it as a position for a long, long time. And, I did not sell when it went higher. And I don't know if I want to increase it at these levels. But the challenge that we're facing is that nobody's understanding how it's going to pan out as the merger between HDFC and HDFC Bank. One of the big challenges that we all have in any big merger is how do you fire people if you're going to try to save cost? So I think that is one of the things that we need to figure out. And it's not, according to me, it's not a 1 quarter, 2 quarter thing. It's going to take longer. And they're going to reconcile offices, they're going to reconcile staff, they have to retrain staff. So it's not so easy. But net, it is a proxy. It's a large part of the index if you take HDFC Bank. So it has to be considered, and it has to be considered well, and people are investing as a result.
All right. Hi, Mr. Advani. Good afternoon, Nigel on this side. So HDFC is still in a flux, it appears. So then what to buy? In the past, you've given us some kind of ideas, like when you got into Paytm, Jay Kumar has done well for you. I think it's a doubler from where you bought it initially. A couple of pharma names is what you like. So since we last spoke, what have you added a position in, or what have you added?
So honestly, there isn't that much to do because these stocks have continued to run. I mean, Paytm, you had a chance to. I did exit once, then re-entered, and now I'm sort of in it. So I'm seeing how it's going to roll up. As I said, I'm not particularly wild about the banking sector, not because it is part of the growth series, but I'm also seeing a lot of small loans. Most of the big banks are sort of shrinking and not giving to operators who are giving small loans. So that's affecting fintech companies, that's affecting smaller banks that have been giving loans basically on the net, if you know what I mean. You're buying something and you're getting it for, you want to borrow 10,000 or 15,000 rupees, and those loans seem to be slower and more difficult to get. Just personally, out of experience, the KYC on Amazon Pay and Paytm Pay and all these things, everyone's trying to redo it as a way of trying to lower loan losses in that space. But I am bullish on infrastructure. See, this is a market where the government is driving where we're going. And they want to do infrastructure. They want to have more roads, more buildings. Everything has to be finished ideally at breakneck speed before May. The second thing is they're pushing the PSUs. They want to have them dividend paying, or they're going to have offers for sale because they have to get money back into their system. So there's a big push there. Infra, they're all getting money. The ones that are good are getting more and more money because they need to complete their projects. So those are the sectors. The private sector is not, has stepped up, but it's much slower than the government sector. And the government sector is got their foot on the accelerator and going in fourth gear, whereas the private sector, I think, is in first, second. So the private and public partnership is not actually worked out the way it is. So the government says, fine, we'll drive it from the front, and you guys, when you're ready to join us, you join us. So I think that's what's happening in the markets, and we're seeing that in the markets. The infra companies are doing well, the power companies are doing well, the OMCs have also jumped up quite a lot in the last few days. And I guess they're positioning for large dividends as well as maybe offer for sale. So let's see what happens in the next 60 days.
Pashupati, hi, good afternoon. Since you mentioned the public sector, can't help but ask you, you just look at these gravity-defying moves. They happen almost on a daily basis. Corrections in PSU stocks, if any, last all of one day. What is your take on this entire universe? And if someone's in it, then it's a great ride, and why disrupt it? But does it warrant a fresh entry even now?
So, honestly, you've got two things that are happening in PSU stocks. One is that they're getting more business from the government, which is going to translate into better earnings. That could do one of two things. One is you'll have a dividend that comes out before March. And the second is you'll get an offer for sale that comes out, according to me, before March. So according to what I would do is you'd get into these stocks and then for a trade and then get out if there's an OFS. Okay, but not if there's a dividend, take it and keep going. And you've seen winners like REC go through the roof. It was 400 10 days ago, a week ago. So it's now 500 almost. So you're seeing good quality PSU companies with government investment flying through the roof. So why not?
What about LIC, Pashupati? LIC is finally back to its IPO price. It's had a pretty good run off late. In this year, it's gained 10%. And in the last couple of months, you've seen the stock take off. Thoughts on LIC?
So the thing is that, again, that's a great candidate for disinvestment, simply because the government has a lot of it and would like to sell more. They would obviously like to disinvest at a higher price than their IPO. So I think it'll come if the stock goes up another, maybe $100 from here. Then I think you'll probably see an OFS from LIC. It is the third vertical. If you take Ambani as one and Adani as the second, the third vertical are the government companies. So I mean, they're very much part of what's driving India Inc. And I think you may even see some kind of softs in the budget. Maybe the government companies will get something out of some relief. Somebody mentioned earlier in the show about the green energy and wind power and solar power getting some sops. It looks like the cigarette companies are getting a punch because ITC is down. So let's see what happens. It's a normal, pre-budget sort of jitters from all these companies. But obviously something seems to be happening in the, in the green space, because for Reliance and Adani to take off from this level also, is something. And the move that we've seen in Reliance, hey, we beg for them every day. We beg for it every day.
I mean, and you get it all together in one shot, right? 7-8%. Guys, I just want to point out here that this whole green buzz that I picked up, I mean, it was market sources, but it kind of tallies and marries with a lot of the expectations that industry has put forth in terms of where should additional SOPs go, or even if there is a stated intent, maybe not SOPs in this budget, but perhaps in July, then green seems to be a big focus area, because industry bodies like the CII are arguing for two things. One is infrastructure status for green hydrogen, some of these big projects. I mean, we know Reliance is building a massive complex at Jamnagar, right? And the other is a green transition fund or a sustainability fund. So, for instance, look at Coal India. So, look at Coal India, 6% higher. A lot of these companies eventually have to, earn more green credit. So, if there's any SOP which incentivizes them to partially go green, or, for every, ton of coal that you're producing, do something on the renewable side, perhaps some tax incentives, maybe that's the buzz that the market is going with right now.
Okay, there's another stock, Latent View Analytics, which is reacting to its numbers on the way up. It's up 5%. Now, here the key driver is a pickup in the revenue growth. Now, the company's quarter-on-quarter revenue growth has been improving for the last 3 or 4 quarters. This quarter, it's a 6.4% Q-on-Q growth, which compares with about a 5.5% in Q2 versus about a 4.5% in Q1. So growth rates for the company are improving, and even margins, though they're lower on a year-on-year basis in the peak of the tech spending boom by clients, margins have improved on a quarter-on-quarter basis, and Latent View is a stock which is reacting positively.
Well, there is a lot happening, isn't it? Coal India, as Ruby said. I mean, so Coal India, even after everything it has done, is still below its all-time high, which was around, I think, 450 rupees. And the stock's at about 413 right now. So it's seen a massive move. October of 2023, I mean, just a few months back, stock was at about 250. And from there, it's moved to about 413. So pretty close now to all-time high for Coal India. Nigel, you want to come in?
Well, yeah, Coal India, actually, the problem was that the street went overboard on those ESG concerns. And then they're like, hey, the EPS is going nearly double in 3 years. You have dividend yield of close to around 7.5%. You're also trading still at around 7-8 times its forward earnings. So, put all this together, and still the economy has to go ahead, right? So all the talk about green and all, that's fine. But if there's going to be more focus on thermal, then obviously Coal India is going to be the one, and thermal capacity is being added. So coal will be needed. So there is visibility in terms of growth as well on volume. So put all that together, and even after such a big run, the stock is at its highest level we have seen since 2015, and still it's trading at around 7.5 to around 8 times and giving you a yield of close to around 7.5% approximately. So just thought I'll weigh in on that one. In fact, it's the first time it's hit 400 rupees all the way since 2015. So that's the kind of move we've seen on Coal India from that 120, 130 level, where everyone is fretting about ESG concern. Now everyone's talking about growth, about diversification, about the cash balance in books as well. So good times for them.
No, I mean, well put, Nigel, and that's what the market. That's why it makes it so interesting, right? I mean, market pushes one narrative so much to one extreme, as Nigel said, right? ESG, no use for coal, it's all going to be green.
And suddenly you realize, oh, thermal capacity. Before we set up the renewable, we need more thermal as well.
Yeah.
So.
And the great thing is that people wake up individually, early. People who sort of buy in early, and then of course everybody wakes up collectively, and then you get these massive moves. What we've had in the last 2-3 months, and of course it pays a very neat, nice dividend as well, right? So you get paid for waiting. Like other PSUs, many other PSUs, but Coal India is right up there in terms of dividend yield, etc. Pashupati, thanks very much for joining us. Great speaking with you as always, and talk to you again soon. Thank you. We'll take a quick commercial break here. We'll come back with what's happening in dealing rooms, D Street Chatter with Nimesh. He'll get us a flavor of what he's picking up, and of course, stocks you need to watch out for as well. And after that, our technical experts will weigh in as well with what's happening. Stay with us.
Welcome back. Well, it's looking like a very, very good session. We just got around 20 minutes to go. So let's get in. Nimesh, the screen is telling us it's a very, very good looking screen. But what's the feedback you're getting from dealing rooms?
You know, Nigel, the big talking point today is only Reliance and Reliance. You know, what a move in a single day.
Yeah.
That stock is up 7% for a stock like Reliance to move up so much. And again, you know, there is no specific, at least I have not picked up any particular news, or for that matter, even in terms of flows, it was not indicative that that's a big flow in large cap names, including Reliance, in today's trade. So a big surprise to many dealers and many people as to why Reliance is up 7% in a day like today. As I said, you know, even in terms of flows, it's a mixed day of trade. In fact, there's going to be a small market close sell flow as well. So you'll see that in the last 30 minutes of trade. That's overall feedback from a flow perspective. In fact, I just got a message, you know, in the afternoon saying the sensex is up 1,200 points, but my portfolio has done nothing in today's market. So that's a kind of a day. You know, Reliance is up. A lot of PSU stocks are buzzing in trade. Large cap pieces are up today. Likes of ONGC, likes of Coal India, and that's not something which has largely been owned by the retail investors. So, good looking screen, but it's not something which is exciting a lot of traders, so to speak, in today's market. Again, you know, within the PSUs, that trend continues. Again, I understand the OMCs are well bid, so that's one space which is again been well bid by the institution. So that's where some bit of interest lies. But again, from a market perspective, I guess earnings are going to dominate, and we're seeing this right today. For example, AU is down 12%. And Voltam, a mid-cap company, is up 12%. So that's the kind of divergent moves you're going to see on the back of earnings. But from a flow perspective, it was a mixed day is what I understood. And everybody is equally puzzled as to why a stock like Reliance is up 7% in a day like today.
Well, and Voltam, even after doubling, the stock is up close to around...
And remember, in Voltam, the promoter sold at 4,200.
Exactly.
And from there, the stock is doubled.
So, with today's move. Yeah. And, you know, Nimesh, that's a good point because, you know, you have the Nifty that's up 400 points odd, but you don't have advanced decline 5:1 or something. Exactly. It's almost even Stevens. You know, you have 1.5 stock that's advancing for one stock that's declining. But tell us individual stocks. What do you pick up?
Okay. So in terms of individual names, the first stock on my list today is Tips Industries. 5% move on that stock after a very large block. Nearly 5% equity got changed hands. And I understand the promoter entity was a seller in today's block and a domestic mutual fund was a buyer. So it looks like it was a single buyer who bought out that entire 5%. So no further sell for stake sale is what I'm expecting in Tips, and that's the reason why that stock is buzzing in trade today. The second name is Concor, part of the PSU basket, big move in that stock as well. I understand some HNI investors are quite active in Concor, but from a flow perspective, there are sell flows is what I understand. So expect high delivery volumes, but largely on the sell side from the FIs in Concor in today's trade. The third stock is DLF, at record highs, been a big mover within the real estate name. But today there's going to be a small MOC buy flow into DLF. So maybe you'll see a bit of a spike in the last 30 minutes in DLF, largely on back of flows. And the last one is KPIT. Again, something which is puzzling the market to a larger extent. The stock is down more than 7% in the last 1 week. No specific reasons for it, but there are sell flows is what I understand. So on back of selling pressure from the larger FIs, that stock has been underperforming. And even in today's trade, that stock is down largely on back of sell flows.
Okay, all right, got that. Thank you, Nimesh, very much for that. You know, a really ferocious day of gains today, looking at the way things are moving. By the way, look at Axis Bank as well. It's powering through. A lot of these banking names have put on more weight in the last half an hour. Kotak, Axis, even HDFC Bank for that matter, ICICI Bank, SBI. All of your large cap banks are, you know, either at day's high or making fresh highs as this afternoon rolls on. Well, speaking of financials, let's put the spotlight on Bajaj Finance, which will be coming out with the numbers today. Abhishek is here with the key expectations. Abhishek.
Well, to begin with, they've already given a preview number with respect to business momentum. So the loan growth or AUM growth over there has been at stellar 34.7% YOY, which is perhaps the best that you are seeing in the last 16 quarters of 4 years. So the key thing to watch is that the net interest margin may expand on a sequential basis. That is quarter on quarter. Kotak Securities is estimating for 12 basis point increase in net interest margin. However, it may decline on a YOY basis. So again, Kotak Securities is estimating a 15 basis point decline in net interest margin on a YOY basis. Asset quality to improve, provisions to remain under control. Now, impact from RBI's recent rule, how that will take the business momentum ahead, will be seen closely. Management commentary with respect to future outlook and restructuring of the team, that will also be seen closely. Our polls suggest an ag growth of 2.4% YOY and about 5.7% sequentially. We are working with a profit growth of 20.8% YOY and just about 1% sequentially. Back to you.
Okay, thank you very much for that. ITC is the big one, which will be reporting numbers post-market hours. Mangalam joins in with the expectations. Mangalam.
Well, for ITC, it's a mixed quarter which is expected, and that's largely because the street doesn't expect too much from the cigarette volume standpoint. There is some recovery that will continue in the FMCG business and the hotels business, but some weakness is expected in the paper business. So, to sum it all up, what is it that the street is anticipating? 0 to 2% cigarette volume growth, 8 to 10% growth in the FMCG volumes, 12 to 15% jump in hotel revenues. That sector has been doing well. 8 to 10% growth in the agricultural business, and this of course comes in from a low base because the same time last year there was a ban on wheat exports which was announced, and 5 to 10% decline in paper revenue, largely led by realizations. All of that put together would mean an overall revenue growth of 5% ex excise, a little over 17,000 crores. The EBITDA grows just around 3.5% odd. That means the margins are stable around 37.7%, and the net profit also grows just about 2%. The street is working with a number of 5,130 crores on the bottom line. Of course, important to watch will be the way the cigarette business performs. Revenue growth is seen around 5 to 7%, whereas volume growth is 0 to 2%. We'll also keep an eye out on how the commentary pans out for FMCG margins and the hotel business, and any update on the hotel business demerger.
Okay, all right, Mangalam, thank you very much for that. We do have to take a quick break on that note. We'll come back with more on the markets with Gurmeet Chadha on the other side.
Okay, welcome back. 400 points now. I mean, this is turning out to be better and better and better. So 21,747 or so was that level that we were sort of looking at. Yeah, 747 was the level which the market was trading under for most of the session, but now we are above it, about 10-12 points above it, and looking very, very strong overall. Gurmeet is going to be with us in just a bit, I think, but I just want to while he we wait for him, just make a quick mention of what's happening in the broader markets, and maybe we can pull these intradays up. SJVN sharply higher. Names like PFC and REC, some of those big gainers. NBCC looking very strong. IFCI, all public sector names here. IRB, of course, we highlighted with Vivek earlier. NCC is another one which we just mentioned. Castrol is looking very good. There is Amber Enterprises, Voltamp, something like a Shakti Pumps is doing very well. Dodla Dairy, I can go on because the list of big volume-led gainers is just a very long list today. And the other thing is, we look at the broader market gainers, but the other the thing it's very stark is that on the Nifty, some of the top gainers are all public sector names, except Reliance, Adani Enterprises, Adani Ports. Those three names, it's all mostly PSUs. ONGC, big gain today. Coal India looking very strong. BPCL, one of the top gainers. Power Grid and NTPC also participating with some gusto. So this is turning out to be almost a perfect kind of a day. And it was supposed to be a good bounce. It's turning out to be a terrific bounce. Gurmeet, I think, is with us. Gurmeet, good afternoon. It's almost as if we had an event which the market is reacting to. The event is in front of us, but just a terrific bounce. What do you make of it?
I think, Prashant, now we've got pretty used to this, right? 40,000 crores of cash selling in FIs, technically no trigger, and that too after the round table inauguration. And now you get this kind of a bounce. I think partly led by Reliance, almost more than 100 points. And, again, Reliance was languishing for 2 years. Doing nothing. And now if you add Geo Financial, we are almost, 21 lakh crores. So you'll probably soon have a company in India. If the demerger news is around the corner, which probably seems to be the trigger today, you could have the first company at $200 billion market cap. So I think the markets will react sharply. Bull market corrections are also sharp. It's just that I think there is a bit of a reset which will happen. I think the best performing sectors probably might give way to some of the underperforming ones, in my view. I think the rotation is due. We might see that between the budget and the general elections.
Gurmeet, hi, good afternoon. So much doing the rounds, right? That I kind of heard that, but didn't want to bring it up. But since you mentioned it, demerger, basically some expectations that maybe on retail or maybe on telecom. Is that the sense? Which one of the businesses, one, both, either or? What exactly have you been hearing? And we're not sort of trying to fan speculation here, but just trying to make some sense of this massive 7-8% move.
Yeah, I think all three probably. If you see Geo is valued, enterprise value is $150 billion. Retail, the last round was at almost $100 billion with 1% stake by the Abu Dhabi Investments Authority. So if you see the energy business is technically free, even at this valuation. So, and if you apply some holding discount, I think that's what the market is trying to catch up to, in my view. But we'll wait. I mean, these are all speculations and rumors. But for a large cap stock to move this much, there has to be some reason. Market probably has a hint of something which is likely to happen.
What about Adani Enterprises? Did you have a look, at least the synopsis of the Cantor Fitzgerald report on the stock?
Unfortunately, not much coverage there. We just have one, which is Adani Ports and Ambuja and ACC on the cement side. Fortunately, those two have also participated. Cement stocks almost up 40%. Port, I generally believe, is one of the finest businesses they have in terms of both cash flow generation as well as the capacity they have built. Look at the market share they have on cargoes. Look at the multimodal load handling they do. I mean, we visited some of the sites. So we continue to track the cement names. I think there will be some more fillip with the vote on account and the interim budget on cement. Some more expectations are there, in my view, in housing. And I think after a long time, we're getting volume growth back in cement, possibly after a decade or so.
Okay. Gurmeet, a little short on time today, unfortunately, so shorter chat, but I'm sure there'll be plenty to discuss considering this is such a heavy week in terms of news flow and events. Thank you so much for joining in. So that's a word from Gurmeet. We're starting to close out. Just realize that obviously FOMC, the result is for us Thursday morning. So Thursday we have FOMC to react to, then the budget to react to. And typically they say that, the FOMC rarely shakes up the market in a very big negative way. So maybe there's just some positioning ahead of these two events that are expected to be positive according to the market. But anyway, 400 points.
With FOMC, the only thing I heard, which is, is that if you look at the GDP numbers which came out of the US, 3.3% growth in GDP, far better than expected.
That's true.
The core PCE number, which is the inflation number, is 2%. What is the Fed target? 2%. So growth far exceeding expectations. Inflation
in control.
In control.
Goldilocks.
That is, you said it. That's the word.
So perhaps, I mean, people don't want to take too many negative bets, particularly FI positioning, because they've been selling by the bucket loads in the last couple of days. So maybe some repositioning ahead of that. Anyway, let's start counting down then. 400 points up on the Nifty with a gain of 1.8%. You have leadership coming in from Reliance, 7% up on that stock. But then it's not just Reliance. Today, banks contributed. A lot of the large cap names up and about. The bank Nifty is up about 1.5% itself. And HDFC Bank, which has been the big culprit, up about 1.5%. But Rima, then the large cap screen is buzzing with so many PSU names today.
Absolutely. Top of the charts is ONGC with a 9% gain. It's followed it up with BPCL, where the numbers look better than HPCL, NTPC, Power Grid all getting bid up. And then you've got the Adani Group stocks. Adani Enterprises and Adani Ports ends with a solid gain. Few losers, but Cipla is under pressure, down 2%, and ITC, before numbers, lost out close to about 1.5%, and IT names a bit on the back foot.
Some on the back foot, but mostly on the front foot. And how? Well, it's a wrap on this edition, a closing bell from all of us here at Goodbye. Thank you very much for watching us. Market Forward will pick up on all the action in just a bit from now. Stay with us.